Welcome back. The JSE has had a slow start to the year, posting flat profit. This comes as it experienced lower trading volumes within a challenging economic environment. Joining me now to take us through the 6 months that was is company CEO Leila Fourie. Leila, thanks so much for joining us today. We are seeing most of your divisions are delivering growth, which boosted overall revenue. However, that didn't filter through to the bottom line. Just take us through the disconnect there.
Well, we're actually very pleased with the outcome because we managed to deliver a flat net profit after tax, despite a 12% decrease in our overall, our largest market, which is the equity market in value traded. And traditionally and historically, when you see such a big decrease in the trading value or trading activity, that translates into a negative bottom line. So we're very pleased that we were able to deliver 4.2% increase, notwithstanding this 12% decrease in the trading environment. This is really off the back of a number of important increases. Notably, our investor services business was up by 29%. Our commodity derivatives and our currency derivatives were also up double digit, and our co-location revenue was up 17%. We've actively worked to try to diversify our revenue and augment what we've delivered in what we deliver in the trading environment. We've also worked in partnership with a number of global specialists like Amazon Web Services to innovate and upgrade our solution and to ensure that we deliver the solid results, notwithstanding the very complex and difficult economic environment.
We'll get into that diversification strategy in just a bit. You mentioned, the tough trading environment, lower trading volumes. Just contextualize this performance for us even further, considering that, the past 6 months was at a time where there was some political instability as we still had the election, the national election coming up.
Absolutely. We saw the first quarter of the market began at a very slow pace. In fact, our market activity was down by 24%. In the second quarter of the year, we were flat, marginally up on prior year. For the last month, we've been up more than 8% in value traded. If we look at what is causing this, there was a wait-and-see attitude by investors prior to the elections, post the elections, and then particularly just after the announcement of the Government of National Unity, we saw an uptick both in the rand and market value traded. And this has continued to play out over the last couple of months. If we have a look at what happened on Monday, where markets were gyrating back and forth, very severe losses across the board, the emerging market MSCI index ended minus 4.22, and the JSE All-Share index only lost minus 1.19. And so we're starting to see an improvement in our overall market. Our all-share market year-to-date is up 3.3%, and it's outperforming the MSCI emerging market, which is only up 2.3% year-to-date.
Leila, I want to just stick with that for a bit. Considering that, there are still troubles that we have, even looking at the global landscape. We also have, slow economic growth. There is confidence that, the JNU that has been formed is, getting into work and, going to change things. But I guess that'll be happening at a slower pace. What is your perspective your perspective on the overall investor sentiment on South African assets? Are we seeing foreigners dipping their fingers back in again, or are we still seeing that wait and see approach?
I think what we have seen is that the Government of National Unity has been a watershed moment for investor sentiment. government elections and the constitution of the coalition has broadly been positive for business and for growth. And we're starting to see a boost in the confidence and in the outlook for the economy. We have seen over the recent past, directly after the announcement, an increase in investment into our bond and our equity market. And where investors were underweight the index, they're starting to shift to a more neutral position, and their outlook is to resume interest and to reinvest back into the country. Really, what is required to stimulate and to continue this initial interest is delivery by government and policy certainty. And we're certainly starting to trend in the right direction, but ultimately we need some immediate proof points in the short term.
Let's shift now to that diversification strategy. The non-trading revenue is starting to contribute even more to the group's overall revenue. Talk to us about the JSE's initiatives here to diversify its revenue streams and how that's been picking up.
So we've seen a material pickup in the contribution of non-trading revenue. So from 2019, our non-trading revenue contributed 29% of our overall revenue. That's increased by 10% to 39%, largely off the back of mergers and an acquisition that we made in Link Market Services and also in Investec Share Plan Services. That business is up 29%. We've also seen double-digit growth in our information services business over the past 5 years. And we are building out market infrastructure where traders can co-locate their trading engines alongside ours. And that infrastructure service that we've been providing increased by 17%. In addition to that, we are looking to continue to protect our core and to continue to grow our trading markets. So we're not exclusively focusing on diversifying the revenue at the expense of the core. It's a very important part of our business, and we continue to invest in resilience, modernized technology, growing that business.
Leila, before I let you go, earlier this year, the JSE unveiled plans that, they announced plans that they were going to make a listing for smaller cap players easier and cheaper. How has that been going? Are we seeing more listings in the pipeline?
We're certainly seeing an uptick in the number of listings. We've seen an unbundling theme. You would have seen Rainbow Chicken and We Buy Cars recently listing, Psilocybin recently listed, and Powerfleet, which was a NASDAQ Internet of Things type company. And the outlook is very positive. We've also, in addition to the number of listings, seen an increase in the secondary capital raised space. Last year, this time, we'd raised 4 billion in that space, and that's increased to 78 billion rand. So a material uptick there. And then we are also seeing new products like actively managed ETFs, our sustainability bonds increasing year on year. So overall, we are cautious, but we're cautiously optimistic.
Leila, thanks so much for joining us and just taking us through the 6 months. That was the JSE's CEO, Leila Fourie.